It's happening. Bitcoin is decoupling from the stock market and starting to climb, looking ready to catch up with the historic gold rally. We look at reasons why this might be the decoupling event Bitcoiners have been waiting for, and why it's made the switch from risk-on asset to safe haven in the minds of investors. Plus, we hear from Lyn Alden on how Bitcoin's relationship with a weakening dollar, continued capital outflows from the US stock market, and rising global liquidity could be signs of an extended and very different bull market cycle. Could 135K be the next stop on the stairway towards $1 million Bitcoin? Yesterday saw the Bitcoin decoupling narrative once again gain traction, as stocks almost across the board were down, but Bitcoin was in the green, up over 3%, causing even mainstream media to take notice.
Welcome back. Not a lot of green on the screen today, as you know. However, you probably didn't look at Bitcoin. Janae McKeel did, and she's here. It's up 3%. What do you make of the way that this has been trading? It's decoupled, obviously, from the NASDAQ, which was a trend for a while. How do you see it?
Something that people were looking for all month, because if you go back to earlier this month, it really was trading in line with stocks. It just was not seeing the big, pops and drops that one we're used to seeing out of Bitcoin, and two, it is outperforming the S&P. It has not really caught up with gold, the leading safe haven. But I think you are seeing evidence, not just. I think that the obvious and easy narrative would be that we're talking about Fed independence today, so Bitcoin is kind of acting as that hedge against, political uncertainty. But I also think that it's not just enthusiasm; it's also exhaustion. You're seeing people, investors, wanting to, get back into risk, but just maybe not the type of risk that's tied to earnings or Fed policy.
And today, the rally continues, as Bitcoin started the day up another 4%, surging back over 90K for the first time since early March. Stocks are up slightly today as well, but as head of Swan Private Stephen Lupka pointed out on X, Bitcoin is above 90K while the S&P 500 is around 5,200. Bitcoin was at 63K when the S&P 500 hit 5,200 for the first time, which I'll add was back over a year ago in March of 2024. Even Bloomberg TV reported on the decoupling, admitting Bitcoin is starting to act like a safe haven asset. In fact, since Trump's Liberation Day on April 2nd, where he announced widespread global tariffs, Bitcoin and gold have clearly and unanimously separated themselves from the pack. But Bitcoiners have been talking about this inevitable decoupling for years now, and traditional investors around the world are finally starting to understand the peculiarity of an asset that can in the short term react to economic turmoil as a risk-on asset, but in the long run acts as a hard money safe haven asset. This is of course evidenced by Bitcoin's continually climbing 200-week moving average, which tracks the average price of Bitcoin over a 4-year period. This is the signal and has been all along. To really highlight traditional investors' inability to zoom out and view Bitcoin outside of its short-term volatility, longtime Bitcoin critic Michael Gayed posted this on X. "Too bad Saylor chose Bitcoin over gold." To which Saylor casually replied with the actual data, showing Bitcoin outperforming gold by 10x since he started his Bitcoin acquisition strategy in August of 2020. As we've talked about many times on this channel, Bitcoin historically tends to lag gold by about 2 to 3 months. And so right on cue, Bitcoin looks to be catching up to gold's meteoric rise so far in 2025. Fundstrat's Tom Lee was on CNBC yesterday talking about Bitcoin looking now ready to catch up to gold.
Bitcoin up almost 3.5% as well. Let's bring in Tom Lee, head of research at Fundstrat, chief investment officer at Fundstrat Capital, as well as a CNBC contributor. And I don't remember whether it was you or Pump when we were talking about Bitcoin sort of stuck under 85,000 with gold going up every day. And it was either you or Pump that said Bitcoin usually follows a couple of months later, but has a much bigger move.
That was probably Pump.
Probably, yeah. He's pretty bullish.
Yes.
Have you noticed anything similar to that? That's a pretty big move. And in the past, gold's been leaving in the past near term, 2 months, 3 months, whatever, this year maybe. We have seen gold leave Bitcoin in the dust and go to new highs. Looks like it'll do 4,000 easily.
Yeah.
Do you think Bitcoin eventually catches some of the same money, the same bid?
Yeah, I think Bitcoin earlier this year may have been struggling with some of the deleveraging that was happening for institutional investors.
Just selling what they could.
Yeah, selling what they could, and I think that suppressed Bitcoin, especially over weekends. But now that deleveraging is done, I think that Bitcoin is going to catch up to gold, and Bitcoin's old high was over 110,000. So I think there is a lot of room to catch up as a sort of non-dollar asset.
This graphic helps paint the picture in a super simple, but I think succinct way. Fiat money is a terrible store of value due to infinite supply and no scarcity. Gold is a good store of value due to its scarcity. Bitcoin is the fastest horse in the race due to its totally fixed supply, and thus its far superior scarcity. Another metric that Bitcoin tends to lag that we've also talked about on this channel a lot is global liquidity, or the global M2 money supply. Bitcoin historically tends to lag global M2 by roughly 10 weeks. And as this chart shows, which I should mention is corrected with the 10-week lag, Bitcoin is rising right on cue. If Bitcoin keeps up the trend of following global M2 closely, we could see the price rise towards 135K in short order. So in a world where the monetary order is unraveling and Bitcoin is emerging as the strategic asset, BTC in DC provides a forum for open discussion about Bitcoin's role on the global financial stage and how public policy could help shepherd in the Bitcoin era. Join influential figures like Michael Saylor and Adam Back this September in Washington, D.C. to shape the future of finance. Get your tickets today at btcindc.com and be a part of the conversation that could redefine the global economic landscape. Swan is the general partner for BTC in DC, and we're excited to partner with George Washington University and BTC Prague. Our Swan private team will be helping host the event, and we're excited about seeing clients there, so don't miss it. And a quick shout out to Mara, the largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. Now, tariffs and the ongoing trade war with China has also caused the US dollar dominance, or the DXY index, to drop to lows not seen since March 2022. Lyn Alden was on Natalie Brunell's podcast this week, and she talked about how capital outflows from the US, coupled with increasing global liquidity, could be good for Bitcoin going forward and continue the trend of it decoupling from the stock market.
So Bitcoin, I think, will get shoved around by volatility. As this kind of settles a little bit, if you do get ongoing capital outflows of the US, that actually could be good for Bitcoin. So sometimes people ask, what could make Bitcoin more meaningfully disconnect from the NASDAQ? Well, one is anything that hurts NASDAQ margins, but that does not hurt global liquidity, which should generally be somewhat supportive of Bitcoin minus certain particularly volatile periods. But then it more structurally impairs the NASDAQ, the S&P 500. We saw similar to this in the closest period to maybe look at or study is the 2003 to 2007 period. That was the prior weaker dollar cycle. There wasn't this kind of like mass excess of capital, but there was around the margins. Capital went to emerging markets, capital went to commodities, capital went to gold, capital went to these other assets. And so US stocks were not really the place to be, and a lot of other assets were. And I think if we encounter like a 5-year period like that again, that could be a period where Bitcoin does pretty well, even as the stock market, the US stock market, doesn't do particularly well. That's how I view it. I think volatile but favorable.
So if capital continues to flow out of the US dollar and the stock market while global liquidity continues to tick up, we should expect Bitcoin to continue to catch a bid in the coming months and years. Lyn also talked about the current bull market we find ourselves in with Bitcoin and how the cycle dynamics have changed.
We started the year around 93, 94,000. Are we still in a bull run, Lyn?
Short answer is I think longer term, yeah. I think that Bitcoiners got very attached to cycles. And I think especially as the asset gets larger, those cycles become less clear. Anytime a lot of market participants think they know how something works is when it tends to change. So just when all like TradFi market participants were like, bonds always go up when stocks go down. As soon as they all know that, that's when it stops happening because it's already fully positioned for, and then it's not going to happen. And so I think that basically everyone's seen the Bitcoin cycle so many times, they expect there to be a cycle, and cycles can change. And so I think it's less about the halving cycle. It's more about the liquidity cycle, but liquidity is complex in this environment. We've at least taken off some tail risks of politics for the next few years. So Bitcoin has always had this embedded probability of what if the US takes its gloves off and just goes after Bitcoin really hard, right? Because I would certainly tell every major financial institution in the US that you can't custody your own Bitcoin, go after it. That's at least off the table for a while. So I think that a lot of the fundamentals look pretty good at the current time. So I expect pretty good performance over the next year or two. I look at a couple of things. One is I think liquidity is probably going to be somewhat favorable for the rest of the year. And two, if you look at certain valuation metrics, I like to look at the market cap to realized cap ratio, which is market capitalization compared to the average on-chain cost basis. And this current consolidation has taken off a lot of the hype around it. So if you look at the prior consolidation, so Bitcoin reached 73,000 in March 2024, that ratio got a little bit elevated. So it wasn't elevated to the point of like prior like multi-year tops, but it was a little bit heated. And so after about a 7-month consolidation, it pretty much worked off all of that excessive valuation, that excessive hype that allowed the market to consolidate. Then when it jumped to 108K, it reached similar frothy levels. And so the fact that we've been consolidating for several months, not particularly surprising. I think we worked off a lot of that valuation already. So I think we're at a pretty strong foundation to at least start building from, especially once we get past maybe near-term stock market shocks and things like that.
So Lyn makes a good case for this cycle not being tied to the 4-year halving cycles like it has been historically, and much more correlated with liquidity. I think she makes a great case for the continued stair-step pattern up we've seen so far in the last year, where Bitcoin shoots up and then spends several months consolidating before its next leg up. So are we in the start of that next leg up? Only time will tell. But I agree with Lyn that this bull market is not over yet, and this time is most definitely different. Could we see the bull market extended well into 2026 and beyond? I'd love to hear your thoughts, so please leave them in the comments below. Like this video, share it with friends, subscribe to the channel, and don't forget to hit that notification bell so you don't miss the next video. Thanks for watching, and remember, TikTok next block.